When the US is threatened with downgrades and a potential default, markets will tend to seek out safe haven plays, defensive assets where they can hide during a flight to quality trade. One such potential bet is gold, but gold is something of a chameleon. It can be all things to all men. Sometimes it trades as a inflation hedge, sometimes it's a function of real yields, and sometimes it can trade as a safe haven asset. The question is, how is it trading right now? Does it capture the US debt ceiling story? So for example, we could pull in a measure such as 1-year credit default swaps on the US to use that as a proxy for market fears around potential debt ceiling blower and see how important that is for an even asset such as gold. Now, there are some quirks around CDS, both technical and it suffers from poor liquidity, but it does contain some informational value, at least in the sense that it captures when markets are getting more stressed about a potential US default. As you can see from the chart, most of the time, that potential default scenario is close to zero. However, more recently, we've spiked aggressively. So here we've included 1-year SEP sovereign CDS for the States in a model for the gold price. And when we look at the list of drivers, the top positive driver you see here is US sovereign CDS. So what we are indeed seeing is wider CDS spreads are consistent with higher gold prices. Gold is a beneficiary from debt ceiling concerns. If we come to this chart, the blue line is gold macro fair value. It's been rising for over a month now. But what we can see if we go to the attribution, that over the last month has risen by 1%, and the biggest driver of that increase, US default risk. There is no valuation edge currently. You can see we're trading virtually bang in line with macro warranted fair value, which is currently a little over $2,000 an ounce. But at least now we have firm mathematical proof that sovereign CDS as a proxy for US debt ceiling concerns will impact gold. Gold is an efficient way to play those fears, and we can monitor for potential entry levels as and when they arise.